without being entirely informed of what factors are important, such as your own financial situation, the interest rates involved, and really having that mindset switch from let me delay this purchase or this thing that I want to do right now and focus on the foundations of, my personal finance situation, which could, set me up for success in the future.
Let's talk a little bit about financial literacy. This is obviously one of the many missions of the MyMarble team, because I think that's the premise of Maestro, is to really educate your clientele and your customers. Why would you say that's important?
I think it's important because we make uninformed decisions. We make uninformed decisions when it comes to borrowing, it comes to our credit, and without being aware of the implications of the actions that we take, it becomes a slippery slope downwards. And, having worked in the customer service and sales side of things, a lot of the customers that I spoke to that are in consumer proposals or are in a tough financial situation, it purely comes down to not knowing the implications of the actions that they're going to take and what the best practice is. So when it comes to digital financial inclusion, we're seeing that with, the explosion of the internet and the amount of services that people get exposed to, you're being offered loans left and right. It is easy to look at that and find that as a solution, but without being entirely informed of what factors are important, such as your own financial situation, the interest rates involved, and really having that mindset switch from let me delay this purchase or this thing that I want to do right now and focus on the foundations of, my personal finance situation, which could, set me up for success in the future. Let me not get this high interest loan right now because it's going to be a lot of monthly payments that I need to make. I need to consider what my monthly income is and whether this fits into a budget that I can afford. I need to examine all other aspects of my life. What are my entertainment, basic and need expenses? And how does this all factor into my 1-year goal, my 5-year goal, and my 10-year goal?
Great. I know you have many, many practical tips to share with our viewers. I just wanted to ask you, you had mentioned the term underbanked earlier, but if you wanted to just sort of elaborate what it means and what are the implications of being, characterized as underbanked.
The underbanked sector is characterized as those Canadians or the percentage of the population that does not have access to prime financing. So you can't walk into the CIBC or RBC or any of these top institutions to get a loan, to get a mortgage, or to find some kind of financial relief. And that forces you to look into the private market, subprime lenders. And there's no shortage of those types of lenders. So it's important that we kind of realize that distinction, understand what our initial kind of financial practices. You get out of university or early on, you try and get yourself out a credit card. If that doesn't go really well, then, through borrowing more than you can manage or take on or pay off, you find yourself in this underserved market, having to take high interest loans. And, over time, that only reflects on your credit score. And even if in a 10-year period in the last few years, you're able to turn your financial situation around, there's still decades worth of reporting and history that does not reflect positively. So when it comes to the underbanked, underserved, it's about providing solutions to those Canadians that don't have access to livable, practical, and the best kind of financial rates available in the markets.